What is tax? Tax is a compulsory contribution to state revenue levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. National taxes are mandatory contribution imposed by the government and collected through the Bureau of Internal Revenue, or BIR, which is grounded on the Republic Act 8424, or National Internal Revenue Code of 1997, and known as Tax Reform Act of 1997. Export and import tariffs are also referred to as national taxes, but these are levied by the Bureau of Customs and will be excluded from this list. What are the uses of taxes? Taxes are crucial because governments collect this money and use it to finance social projects. Without taxes, government contributions to the health sector would be impossible. Taxes go to funding health services such as social health care, medical research, social security system, or etc. Reasons for requiring Filipino to pay taxes. Paying the right amount of tax is a social responsibility to the country. The taxes we pay will go to government funds that will be used in developing and improving the government facilities and life of Filipinos inside and outside our country. The money you pay in taxes goes to many places. In addition to paying the salaries of government workers, your tax dollars also help to support common resources such as police and firefighters. Tax money helps to ensure the roads you travel on are safe and well maintained. Taxes fund public libraries and parks. Different kind of taxes. We have Philippine national taxes. Number one, estate tax. Estate tax is charged to your estate or properties when the title holder meets their demise. At a rate of 6%, the heir apparent or the rightful beneficiary of the estate should settle this tax before transferring the title to the heir or beneficiary's name. Number two, documentary stamp tax. This refers to the tax imposed on contracts, loan agreements, certificates, and other legal papers that serve as proof of transfer or sale of an ownership or obligation of a property or asset. We also have percentage tax. Percentage tax is a business tax imposed on merchants or business that lease, sell products, services, and properties. They are not VAT registered, with a yearly gross sale at a maximum of 750,000 pesos. We also have capital gains tax. Capital gains tax refers to what an individual or a business pays upon making profits out of selling a valuable asset. These sold assets subjected to capital gains are pieces of jewelry, stocks, properties, and other goods appraised with high value. We also have income tax. This refers to the tax that is imposed on an individual's earning. B. Its salary or profits from his or her professions, business, trade, or properties at rates ranging from 5% to 32% depending on their income bracket. We also have withholding tax. Withholding tax is the amount from an employee's wage deducted by the employer and directly paid to the government for the employee's partial income tax. We also have value added tax or VAT. Value added tax serves as consumption fee that is placed on a product when there is an additional value to its manufacturing and final sale. Since it is considered an indirect tax, the customer pay for VAT. We also have excise tax. Excise tax is placed on products sold in the country and considered an indirect type of tax because this can be recovered by the seller or producer by increasing the price of these products. This is emphasized in the train law. Example placement of an excise tax can be cited from the products with health risks such as liquors and tobacco. We also have donor's tax. Donor's tax is placed on a gift, donation, or willful fee of charge, transfer of property between the benefactor to recipients on their lifetime. There are some cases where BIR would scrap this tax. An example of this is goods provided to the victims of the destructive Typhoon Yolanda. We also have the taxes of Philippine local taxes. Number 1, franchise tax. This refers to the tax imposed on franchise business at maximum rate of 50% of the 1% of the gross yearly receipts from the preceding year. Number 2, basic real property tax. Basic real property tax covers six types of properties: agriculture, commercial, industrial, mineral, residential, and timberland. We also have sand, gravel, and other quarry resources tax. At maximum of 10% of fair market value in the location per cubic meter of quarry resources such as gravel, sand, common stones, earth, and sand price from public lands or waters will be collected by LGUs. We also have business of printing and publication tax. These taxes are also collected from publication or printing of books, posters, pamphlets, cards, tarps, and other print materials. We also have annual fixed tax for delivery trucks and vans. Local government units or LGU collect 500 pesos every year from delivery vehicles such as trucks and vans handling products like beverages, food, cosmetics, tobacco, etc. And we also have professional tax. This type of tax applies to individuals whose professions require examination from the government, such as board exams or licensure. These professionals include lawyers, doctors, engineers, architects, and others subjected to this tax. We have also amusement tax. Films, theatrical plays, concerts, and all forms of entertainment shows are subjected to tax. It is also commonly added to the admission price or the entrance tickets. We also have community tax. Community tax is a tax for the public. One must pay an amount depending on your income bracket. The base fee is 5 pesos and it has an additional increase of 1 pesos for each 1,000 of income. We also have barangay tax. Microbusinesses such as retailers and sari-sari stores that earn a gross sale of 50 pesos or 50,000 every year have to pay the barangay tax. The tax will start to accumulate from the very first day of the first month of each year. And barangay clearance. This certification from the barangay serves as legal proof of permission to conduct an activity or start a business in a particular barangay. It is also used as documentary requirement on government transaction and employment. The benefits of taxation. Taxes generally contribute to the gross domestic product or GDP of a country. Because of this contribution, taxes help spark economic growth, which in turn has a ripple effect on the country's economy, raising the standard of living, increasing job creation, etc. Being able to tax citizens and collect revenues efficiently is a cornerstone of state formation and survival. Secondly, greater fiscal capacity implies greater access of the state to the resources needed to provide public goods and services. Developing countries are only able to raise a small share of taxes. That's all and thank you.